Well, it's time now for the explainer, where we pick certain market terms and make sense of it, and as our only two-way of boosting capital market literacy. Now, today's word is asymmetric corridor. In line with market expectations, the Monetary Policy Committee of the Central Bank had kept rates unaltered, including the asymmetric corridor, in their last rate-setting meeting. But what is the monetary policy asymmetric corridor, and what effect does it have on the market? A professor of capital markets, Professor Uche Waleke, is in our Abuja studio now to provide a brief insight on this. Good evening, Professor Waleke. Thank you for joining us on the program.
Yeah, good evening, Edidio, and may I say Happy Easter to you?
Happy Easter to you, Professor. Could you just tell us what exactly is asymmetric corridor and how does it impact the market?
Okay, thank you. I would like to start on this premise, and that is the relationship between interest rate and stock returns. Studies have shown that that relationship is negative, even from experience here in Nigeria. Usually, the higher the interest rate, the lower the stock returns. Now, stock returns in terms of share prices, appreciation. So you have a negative relationship between the two. And we also know that monetary policy tends to influence the direction of interest rates. So talking about policy corridor, many economies of the world conduct monetary policy using a single policy rate. The key policy rate is usually the key lending rate by the central bank. So we say that the policy rate is the rate at which the central bank lends money to other banks. Of course, the central bank is the lender of last resort. So in Nigeria, that policy rate is called the monetary policy rate. In other climes, we have names like repo rate, rediscount rate. As a matter of fact, back home, we used to call it the minimum rediscount rate, but renamed the monetary policy rate. So that's the key policy rate that we have in Nigeria. And the policy rate is usually set, within a corridor, within a window, within a band, comprising the standing lending facility, which is usually set above the policy rate, and the standing deposit facility, which is set below the policy rate, which is the lower bound, the floor. The ceiling is the standing lending facility. So in our own case, of course, the central bank retained it during the last MPC meeting. In other places, the policy rate is usually placed between the corridor, symmetrically. So you have, equal parts symmetrically. For example, in India, the Reserve Bank of India, used to have 200 basis point corridor plus 100 minus 100. And by the way, too, since we are talking about explainer, basis point is 100 basis points is the equivalent of 1%. So in Nigeria and some other countries like New Zealand, it is that symmetric corridor where the policy rate is, in our own case, very close to the upper bound. Now, the MPR in Nigeria is 11.5%, and the standing lending facility, as I mentioned, is usually above it. In our own case, it is plus 100, which is plus 1. In other words, the lending rate, the rate at which the central bank now lends to the banks, it is 11.5 plus 1, which is 12.5, okay? And the standing deposit facility is 11.5 minus the 7%, because it is minus 700 basis points. And I just said 100 basis points represent 1%. So 700 basis points will be 7%. In other words, the standing deposit facility, which is the rate at which the central bank now remunerates banks that place money with it, is actually 11.5 minus 7, which is 4.5. Okay, so central banks are usually careful not to allow the rate to be the corridor, to be so wide, because if you make it so wide, yes, you provide an incentive for banks to deal amongst themselves, but that can also trigger volatility. And if you make it so narrow, what usually happens, you also provide an incentive for banks to rely so much on the central bank, and then that is also to the detriment of the growth of the money market. So the central banks usually try to strike a balance. Now, how that affects the capital market is, just as I said earlier on, the wider the corridor, okay, that gives an impression, an implication of tighter monetary policy. So remember before September 2020, it was plus 200 minus 500. And the central bank decided to narrow it to plus 100, in pursuit of accommodative monetary policy. And that was one of the reasons, in my view, that also led to the bullish nature of the market, especially towards the end of last year. So the asymmetric corridor was changed in September last year during the MPC meeting of September from plus 200 minus 500 to plus 100 minus 700. And as I said, that was in keeping with lower interest rate environment. And that rubbed off positively, on the equities market. You had Ajadi mention it, that last year the equities market was about the best in the world, returning 50%. And that was on the back of the low interest rate environment, which was engendered by the central bank using,
I'm afraid we've run out of time.
The asymmetric corridor.
All right, Prof, I'm afraid we've run out of time, but thank you so much for, providing some insight to what that is. Hopefully now more people would understand what it means. Thank you, Prof. Professor Uche Waleke is
Thank
a
you,
professor.
Edido. My pleasure.
Professor Uche Waleke is a professor of capital markets at Nasarawa State University.